Welcome back. And in our top business story, major ports across the GCC are set to see growth of more than 5% by 2017 as the region's maritime trade landscape is being reshaped. GCC countries are leading the way with the next generation terminal facilities and regional connectivity as governments and private sector investment is accelerating the development of terminals to open up a new era of economic opportunity. Captain Mohammed Al-Shamisi, the Executive Vice President of the Ports Unit in ADPC, was quoted as saying that attention is shifting from west to east, as billion-dollar initiatives such as the Khalifa Industrial Zone Abu Dhabi is leading the way for future commercial opportunity and continued economic diversity. Off the back of this, changing dynamics of seaborne trade development will top the agenda for the World Ports and Trade Summit in March next year, designed to promote trade development, examine supply chain management systems, and discuss port efficiency, as well as the introduction of a special Africa focus. Passenger traffic at Dubai International Airport is set to pass its target of 56.5 million for the year, according to the monthly traffic report issued by Dubai Airports, and is likely to hit 66 million in 2013. According to news agency WAM, this comes off the back of the world's fourth busiest hub, racking up another month of double-digit growth this November, reaching 4,875,003, up 10% from November last year. The year-to-date traffic to November this year totaled 52,363,589. The UAE is the second largest desalination producer in the world after Saudi Arabia, according to officials. According to a local paper, Mohammed Abdul Hamid Dawood, an advisor at the Abu Dhabi Environment Authority, was quoted as saying that the UAE pumps nearly 2.02 billion cubic meters per year, and that the country's output last year was nearly triple the level back in the year 2000. He also warned of a water gap in the Gulf by 2030, off the back of increased population and economic expansion, where the deficit could soar to nearly 35 billion cubic meters in 2030. Dawood noted that water consumption in the UAE is among the highest in the world, due to hot weather, a rapid rise in population, waste habits, among other things. He said demand in the UAE averages as high as 360 litres a day per individual, with Abu Dhabi seeing the highest consumption rate, standing at more than 550 litres per individual, compared with 200 litres in Sharjah. Abu Dhabi National Oil Company is eyeing up 10 suitable sites to open up its first petrol stations in the Emirates. According to a local paper, ADNOC Distribution, the retail arm of Abu Dhabi National Oil Company, is leading the surge, which is being carried out under the supervision and follow-up of the Supreme Energy Council in Dubai. Abdullah Salem Al-Daheri, ADNOC's Director General, was quoted as saying that the location search is phase one of the plan, while the second phase will see the company put together a plan to address the Emirates' needs, as well as extending its services. He added the expansion comes in line with the Emirates Vision 2021 and is also a part of a joint agreement to enhance the partnership between the Supreme Energy Council and ADNOC, as well as to help increase the number of Emirati workforce. And let's now take a look at the stock indices across the GCC. And looking to other business news now, the US dollar continued its gains in trading last week, particularly against gold, which dropped to a 5-month low against the greenback. The precious metal was the biggest loser on the week, shedding almost 2.5% during the week. With no apparent solution to the impending US fiscal cliff negotiations, Risk sentiments were at a premium, and the US dollar found good buying support. Well, we earlier spoke to Gaurav Kashyap, the head of the DGCX trading desk at Alpari Middle East, to talk about the performance for the last week of 2012.
The FOMC's announcement on Wednesday had a peculiarly interesting effect on the US dollar's performance. Now, we did see the FOMC announce an additional $45 billion US dollars worth of asset purchases. This is obviously an extension to the $40 billion that they're currently buying in mortgage-backed securities. So what this means is additional liquidity for the US market. So technically, we should see the US dollar weaken. And we did see that to be the case against higher yielding assets such as the euro and the British pound. However, if you look at the performance of the US dollar against gold, gold actually weakened in trading and now is meandering between the 1685 to 1690 key support levels. What this shows us is that a lot of the pricing action from the FOMC and the expectations were already priced in. So what we're going to take from that is that we're expecting the US dollar to close out 2012 on a very positive note. And this is because of the ongoing fiscal cliff negotiations. We don't expect to see anything until the 11th hour coming out of there. Earlier in the morning, we saw Speaker of the House, John Boehner's proposal shot down by the Democrats. Once again, this type of volatility and will keep the risk off trade in favor of the US dollar in the week ahead. Also, what we're watching for is the performance of the Japanese yen. Earlier in the morning, we saw the LDP party led by Shinzo Abe sweep the polls in Japan. Of course, Shinzo Abe is a very, very keen component of aggressive monetary easing, which would naturally have a weakening effect on the yen. Also, we're going to keep our eye out for the INR, the Indian rupee, in the week ahead. Earlier in the morning, the Indian government actually downgraded growth forecast to 5.7%. This is down from a previous reading of 7.6%, and this will precede the RBI's meetings tomorrow, where they're expected to announce some kind of easing measures for the Indian economy. But overall, we like the prospects for the US dollar going into 2013.